$340 million in new revenue. That's what early AI adopters in community banking generated in under 2 years. Still running manual workflows? By the end of this video, you'll know exactly how institutions half your size are using AI to dominate lending, deposits, and customer retention while their competitors wait for the next core system upgrade. Let me show you what's actually happening right now in community banking. While most institutions are still debating AI strategy, a small group of early movers already captured measurable market share. We're not talking about chatbots or basic automation. We're talking about AI that underwrites loans in minutes instead of days, predicts which customers are about to leave before they move a dollar, and identifies cross-sell opportunities your relationship managers never saw coming. The gap between leaders and laggards isn't closing. It's accelerating. And here's what makes this particularly urgent. The institutions making this shift aren't the billion-dollar regionals with unlimited IT budgets. They're community banks and credit unions that decided they couldn't afford to wait anymore. They're working within the same constraints you face. Same core providers. Fiserv, Jack Henry, FIS. Same regulatory pressures. Same talent challenges. Same compliance requirements and examination cycles. But they made one critical decision differently. They stopped waiting for their core banking system to deliver AI capabilities and started building the layer that sits on top. Because here's the truth most vendors won't tell you. Your core banking platform was never designed to be an AI engine. Fiserv, Jack Henry, FIS. These platforms are incredible at what they were built for. Transaction processing, account management, regulatory compliance. But AI-driven decisioning, real-time predictive analytics, hyper-personalized customer experiences, that requires a different architecture entirely, one built for machine learning and continuous model improvement. The institutions winning right now understood this 18 months ago. They didn't rip and replace their core system. They augmented it. And the results aren't projections or pilot programs. This is actual revenue, measured and verified, generated between January 2023 and June 2024. Let me take you inside one of these transformations. Robert Hartwell ran a $2 billion community bank in the Midwest. Strong balance sheet, loyal customer base, respected in his market. But he was losing sleep over two numbers. First, his commercial lending pipeline conversion rate dropped from 42% to 28% in just 2 years. Second, his customer acquisition costs doubled while his digital competitors were cutting theirs in half. Robert knew something had to change, but every conversation with his technology team ended the same way. We're on Jack Henry. We're planning a digital banking upgrade next fiscal year. We need to wait for the roadmap. Then he had coffee with Marcus Chen. Marcus pulled out his tablet and showed Robert something that changed everything. He displayed the lending performance of a similar institution, same asset size, same market dynamics, that implemented AI-powered loan origination on top of their existing core system. Their pipeline conversion rate hit 63%. Time from application to decision dropped from 11 days to 40 minutes for commercial loans under $5 million. Their lenders weren't working harder. They were working with intelligence. The AI analyzed 5 years of loan performance data, identified which applications had the highest probability of approval and profitability, and surfaced the exact risk factors that needed human review. Everything else moved automatically. Robert adjusted his silver-framed reading glasses, the thing he always does when he's processing something significant. He asked the question every executive asks at this moment. How long does this take to implement? Marcus answered honestly, 90 days for phase 1, full deployment in 6 months. But here's what matters more than timeline. You don't touch your core system. This layer integrates with Jack Henry through APIs your core provider already supports. You're not replacing infrastructure, you're adding intelligence. Robert made the decision that afternoon. Within 4 months, his institution deployed AI across 3 critical functions. Loan origination, using a best-in-class system like Abrigo enhanced with AI decisioning models that learned from every application processed, getting smarter with each approval and each decline. Deposit relationship management, with predictive models that identified which customers were at his risk of leaving and which were ready for wealth management conversations. And fraud detection that caught suspicious patterns 48 hours faster than their previous rule-based system, flagging anomalies human analysts would have missed until it was too late. The results weren't subtle. In the first 12 months, they originated $87 million in additional commercial loans they would have lost to competitors with faster decisions. They retained $16 million in deposits from customers the AI flagged as flight risks 3 months before they started moving money. And they reduced loan processing costs by 38% because their lending team focused only on applications that needed expert judgment, the complex deals that truly required their decades of experience and market knowledge. That's one institution. One 34-month transformation. And they weren't the largest or most technologically advanced bank in their market when they started. The institutions we work with across Texas, the Southeast, and the Midwest are seeing similar patterns, from rural credit unions to urban community banks. The common thread isn't budget size or IT sophistication. It's the willingness to stop waiting for someone else to build their competitive advantage. Here's the one action you need to take this week. Schedule 30 minutes with your chief lending officer and your head of IT. Ask them this specific question. If we could reduce loan decisioning time by 70% without touching our core banking system, what would that do to our pipeline conversion and market share? Don't make it a technology discussion yet. Make it a business impact conversation. Because the moment your team starts calculating what faster decisioning is worth in actual loan volume, everything changes. You're no longer debating whether AI is worth exploring. You're asking how fast you can deploy it. And that's when you call someone like Marcus Chen. Not to sell you software. To architect the integration between your existing systems and the intelligence layer that turns data into revenue. That conversation doesn't take months. It takes one call. And if you're running a community bank or credit union between $500 million and $10 billion in assets, that call is probably the highest return hour you'll spend this quarter or this entire year. The businesses that survived the next 3 years all did one thing. Next video reveals it.